Good day Forex trader. Your USD Forex signal, strong bearish breakdown. Today's your USD signals. Risk 0.75%. Trades may only be taken between 8 a.m. and 5 p.m. London time today. Short trade ideas. Go short following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.1467, $1.1513 or $1.1563. Put the stop loss 1 pip above the local swing high. Adjust the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. Long trade idea. Go long following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.1394. Put the stop loss 1 pip below the local swing low. Adjust the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Your USD analysis. I wrote last Thursday that the technical picture had become slightly more bearish but needed to make a daily close below $1.1529 before a real strong bearish breakdown could happen. I noted there was plenty of support around the big round number T $1.1500 and suggested that a short trade from a retest and rejection of $1.1624 would probably be the best opportunity. The price never quite reached $1.1624 but my call was on the right track, as a short from the area above $1.1600 could have been taken profitably later in the week. Yesterday we finally got the daily, New York, close below $1.1529 that I was seeking, and the price is continuing to fall strongly to new one-year lows as the London session gets underway. The price now has room to fall all the way to the next round number at $1.1400 without encountering any support. Yesterday's bearish movement was about twice the typical daily range of volatility, and that is always a sign in this currency pair that the movement is more likely than not to follow through over the next day. Therefore, today is very likely to be a down day, and the price may well fall all the way to $1.1400 just over the course of today's London and New York sessions. The euro is weak, and yesterday's release of surprisingly high US inflation data is pushing market expectations in favor of an earlier US rate hike, which is boosting the US dollar, plus risk-off sentiment is also boosting the greenback. There are several reasons to be very bearish in this currency pair, and I take a bearish bias here today. Gbp Usd Forex signal, extremely bearish ahead of UK GDP data. The pair will likely keep falling as bears target the first support of the standard pivot point at 1.3385. Bearish view. Sell the GBP/USD and set a take profit at 1.3380, S1. Add a stop loss at 1.3600. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.3540 and a take profit at 1.3700. Add a stop loss at 1.3400. The GBP USD price declined as investors reflected on the strong US inflation data. Focus shifts to the upcoming UK GDP numbers that will come out in the morning session. It is trading at 1.3515, which is about 0.7% below the highest level this week. US inflation rebounded. The world is going through a period of high consumer prices. On Wednesday, data by the American Statistics Agency showed that the headline Consumer Price Index, CPI, rose by 6.2% in October. This increase was the highest it has been in more than 30 years. It was also substantially higher than what analysts were expecting. Meanwhile, core CPI, which strips the relatively volatile food and energy prices, rose by 4.6% in October. The number was also higher than what most analysts were expecting. It was also higher than what the Federal Reserve was expecting. Therefore, these numbers show that inflation has been relatively stubborn this year and the situation could get worse. In addition to the ongoing supply shortages and higher oil prices, the recently signed infrastructure package will help to spur inflation. As such, there is a likelihood that the Federal Reserve will turn more hawkish in the coming meetings. In the past monetary policy meeting, the bank decided to taper by about $15 billion. But it also left room for more tapering if inflation remains high as it currently is. Meanwhile, the Gbp USD pair will react to the latest UK GDP numbers that will come out in the morning session. Analysts expect these numbers to show that the UK GDP rose by 1.5% on a quarter-on-quarter basis. This will be significantly lower than its Q2 recovery of 5.5%. On a year-on-year basis, the economy expanded by 6.8%. Gbp Usd Forecast. The 4-hour chart shows that the GBP/USD pair has been in a bearish trend in the past few hours. The pair has moved from this week's high of 1.3608 to a low of 1.3510. The pair has also moved below the 25-day and 50-day moving average. It has also moved below the standard pivot point while the relative strength index, RSI, has also declined. Therefore, the pair will likely keep falling as bears target the first support of the standard pivot point at 1.3385. On the other hand, a move above the key resistance at 1.3580 will invalidate the bearish view. Aud USD Forex signal, path of least resistance to downside. The pair will likely keep falling as bears target the key support at 0.7200. Bearish sign. Sell the Aud USD and set a take profit at 0.7200. Add a stop loss at 0.7400. Timeline, 1 to 2 days. Bullish sign. Set a buy stop at 0.7340 and a take profit at 0.7450. Add a stop loss at 0.7250. The AUD USD pair declined for 3 consecutive days as investors reflect on the fast rising American inflation and the relatively weak Australian jobs numbers. It is trading at 0.7312, which is about 3.2% below the highest level in October. US inflation and Australian jobs numbers. The AUD/USD pair declined sharply after the relatively strong American inflation data. The data showed that the country's headline inflation rose to the highest level in more than 30 years. The headline consumer price index rose to 6.2%, which was higher than the median estimate of 5.8%. Core inflation rose to 4.6%, which was substantially higher than the previous jump of 4.2%. The two numbers also rose on a month-on-month basis. Therefore, these numbers signal that the Federal Reserve will likely accelerate the pace of asset purchases. It will also likely hike interest rates earlier than expected. Australia is also seeing high inflation. For example, home prices in most cities and even rural areas have risen to record highs. Meanwhile, the AUD-USD pair also declined because of the weak Australian jobs data. According to the Australian Bureau of Statistics, ABS, the country lost more than 46.3k jobs in October. This was in addition to the 138k jobs that the country lost in September. Analysts were expecting the data to show that the economy added 50k jobs. The participation rate rose from 64.5% in September to 64.7% in October. At the same time, the county's unemployment rate jumped from 4.6% to 5.2%. These numbers signal that the country's economy is recovering at a relatively slower pace than expected. Still, there is a possibility that the situation will stabilize in the coming months. AUD-USD Forecast. The 4-hour chart shows that the AUD-USD pair has been in a major sell-off in the past few weeks. The pair has dropped to the lowest level since October 11. It has also moved below the 25-period and 50-period exponential moving averages, EMA. The pair has also formed the three black crows pattern, which is usually a bearish signal. Therefore, the pair will likely keep falling as bears target the key support at 0.7200. On the flip side, a move above 0.7350 will invalidate the bearish view.